operating, investing, or financing. A building costing $120,000 was purchased for cash. Inflow or outflow? Investing, outflow. Equipment costing $25,000 was also purchased for cash. Investing, right? Equipment, you're purchasing equipment, you're investing, right? Issued common stock for $20,000 in cash. Good. Cash sales of merchandise. Cash paid for merchandise. Good. All right, so just wanted to make sure we're on the same page here. Now the statement of cash flows that I showed you that we put together here is under the direct method. Okay, that like the format is under the direct method. Okay, the big difference, and we're going to talk about this in a moment, is really in the operating section. But what I've shown you at that point, that full statement of cash flows, you may want to note that is on the direct method, not the indirect method. So take a look at exercise 5.13, and you're going to be doing something similar to what you did here, just classifying as operating, investing, or financing. Exercise 5-13. So that's why cash is important. Cash is important to investors and creditors. So investors want to know, are we going to make money? Am I going to make money? Right? Because we use cash to pay our dividends, right? We use cash to pay our bills. So investors are going to make money if they receive dividends. They're going to have dividend income. If their stock price goes up, they're concerned about cash for these reasons. Creditors want to know, will the borrower be able to pay back the loan? Will they be able to pay their bills on time? So they're concerned with cash, not just accrual basis figures. So the bottom line in all of this, in this discussion of cash flows as we are starting to delve in, is that we use cash, not net income, to pay our bills and to pay dividends. Without cash, we can't pay our bills or pay dividends. We receive cash. We can receive cash from sales. We can receive cash from investments. We can receive cash from loans. We can receive cash from issuing stock, as we saw. But if we receive a significant amount of cash from these financing or investing activities, like loans or stock issuance or investing, it could have implications for the survival of our business operations. That's why we need to show those three sections separately, because they each have different implications. So, can I move on to the next slide? Yeah? No? Okay. Yep, I'm sorry, let me get out of the way here. Did I remove more stuff than I usually do? Is that okay? I'll try to remove less next time. I guess I went line happy. Usually I don't feel like we have to do that. Sorry about that. Okay. All right. Now can I move on? Okay. So we have two methods for reporting the statement of cash flows. This is what I was getting ahead of myself. We have the direct method and the indirect method. So the direct method shows us the cash effect of each item that's on the income statement. Okay, and that is reported directly on the statement of cash flows. And I wrote here, kind of like a cash basis income statement. So instead of seeing sales, you would see cash received from customers. Instead of seeing general and administrative expenses, you would see cash paid for operating expenses, cash paid for interest, cash paid for dividends. Okay? Or various other things. Actually, I shouldn't say dividends paid. That's actually in a different section. But cash paid for, I meant to say income taxes. Okay? So these things are on the operating section. So in the indirect method, you will see net income. You will always start with net income on the indirect method. Okay? And you derive cash indirectly by reporting net income and adding or subtracting items to convert that to a cash basis. So the difference between direct and indirect is only in the operating section. The other two sections, investing and financing, are the same. The difference is in operating only. Okay? So if you see something that looks like a cash basis income statement, you know you're using the direct method. If you see something that starts with net income, you know you're using the indirect method. Now, what do you think if you had a, I don't know, well, actually, let me flip to the next one, and then I'm going to ask you this question. Can I move? Yeah? Okay. I have, in summary, I have this here. I just want to mention this. So in summary, operating, think net income, think current assets and current liabilities. It just kind of summarizes this stuff. Investing, think non-current assets. Financing, think non-current liabilities, shareholders' equity, and dividends paid.